Thank you, Tariq, Umar, and Mohammed, for this very insightful conversation on digital banking and innovation. Gladly we'll have Matthew join us back on stage to present his keynote speech titled FinTech Trends in MENA and the Wider World. So if you could help me welcome Matthew back on stage once he's mic'd up, any minute now.
Okay. So, thank you. I enjoyed that conversation we had really about what's happening with FinTech here. I'm just going to tell you what I'm doing globally, what I've observed, and perhaps have some questions, or it'd be great to have some interaction, conversation about what you see happening here. So, I'm ready for my presentation. Anybody have any questions just to start off with about FinTech globally? Anything you really want to know? Okay, there we are. So just looking at FinTech adoption, this is EY this year. Talking about China, obviously number one, 66%. India, again, not far behind, 52%. UK, not far behind either. Brazil and Australia, leaders in FinTech adoption. And again, you're kind of tempted to have a simplistic view of this, but the truth is very pure, rarely pure, and never simple, I would say, certainly in FinTech. So we have, obviously, China, a lot of financial exclusion previously, starting to move now towards FinTech, rapid rate of adoption because it's really working. Then we have, obviously, India, eKYC, Aadhaar, making things happen very, very quickly. I know a lot of cybersecurity firms who are very busy now in India because suddenly so much money is moved into the financial technology sphere, the fraud is really, really ramped up. So a very good time for AI cybersecurity there. UK, again, we were forced to kind of do this because of the financial crisis. We had PSD1, now we have PSD2. We have very good dynamics within London, particularly, that's catalyzed a lot of FinTech activity. So high level of adoption there. Brazil, again, similar environment to China, really. Financial exclusion, a lot of bureaucracy. Suddenly people finding FinTech can really not cut corners, but speed things up. And then Australia, a lot of adoption from consumers. So when I ride in a cab in Australia, there are about 5 or 6 different ways to pay. Everyone does contactless, pay wave. But we find in Australia a lot of institutions not behind it yet. Macquarie have just launched an open banking initiative in Australia now, in beta. So that's exciting. It's beginning to move. But we have this picture, Australia, a lot of people wanting to adopt it, but not really having much to adopt. China, everyone adopting it freely. So there's a lot going on in this space. These are my notes for actually a previous piece. So I'm not going to tell you everything. If you're new to FinTech and digital banking, I would say, again, think about what you want to know. Think about your key objectives, where you want to go with those. There's always an answer. There's plenty out there, as you can see. So the Wefts report came out a couple of months ago with Deloitte. Very good piece, 200 pages, seems to be a landmark piece, and it had 3 conclusions, basically saying that FinTech wasn't the big kind of enfant terrible that it was supposed to be. We don't really see FinTechs taking over the world. So one part was they think FinTechs will work more closely with banks, as we're seeing here in Saudi Arabia. Another part was tech companies will begin to move into this space. I'll go through that in a minute. And they'll begin to dominate in banking. And the third conclusion was that open banking will take over. So a massive panel worked on this report, very, very experienced. And certainly we see open banking, open APIs beginning to lead the way globally in banking. So yes, this is their research framework. Obviously, you talk about payments, insurance, lending, capital raising, investment management, market positioning. So I'll give you this presentation so you can look at it, but those are the main areas of innovation there. This is Apple in August. Apple Pay Cash Card on the scene. It's arrived. This is Alibaba now in Indonesia, leading an investment in an e-commerce firm. Indonesia is really, really big at the moment. I'm seeing a lot of activity there, a lot of growth. Airwallex, another Australian fintech startup, now moving into Indonesia. Talking about London, Singapore, big centers for fintech. This is Lattice 80, massive in Singapore, now moving into London. Just a quick note on Brexit. No one's quite sure what's going to happen with that yet. It does give us a real chill in the fintech sphere. We feel we might miss out on PSD3. So PSD2 obviously is the Payment Services Directive designed around open banking. I'll go into it more in a moment, but we're supposed to have by 2019 open banking APIs that are shared across European banks. Obviously, that's not going to be perfect, so we're looking forward to PSD3. And we think with Brexit, we might miss out on that if we have it. But certainly with a lower pound at the moment, we're seeing a lot of people moving into Britain. Amazon have moved in recently because obviously operations are cheap. Lattice 80 have obviously moved in there. Another note here, WhatsApp, owned by Facebook, verifying business accounts. Maybe merchant payments are next. These kind of things happen with fintech and all tech. Things move slowly and then they pivot. You know, things in the rear view mirror are closer than they appear to be. So maybe we'll see WhatsApp having merchant payments. Amazon launched Amazon Cash. This is really similar to M-Pesa. Does anybody know M-Pesa? Yes. Incredible system. I worked with the central banker who implemented that over 2 terms. But obviously, M-Pesa, I think 66% of Kenyans are using that now to bank with, just SMS banking. You take your money into a store, it is converted into mobile credit, and from there you go. I know people who now sew SIM cards into their clothes. They get $10,000 on them each when they want to move money from one area of the country to another. This is obviously MasterCard. Interesting piece here. I don't know if you know Revolut. Anybody know Revolut here? Getting more and more attention globally. But they are a kind of virtual, they actually give you a card. It's an app that enables interbank FX. So FX interbank rates with no commission. They use the MasterCard network. They've been going for about 3 years now. This had a big crowdfunding. They're doing kinds of innovative things. When I took China's 18 leading banks to meet them, the cards flew out. Everyone wanted to invest in them. And they asked, can't MasterCard stop you from doing this? And of course their answer was, no, of course MasterCard, we're just using them as a rail. So from that point on, MasterCard have got a kind of API-based structure. All of these activities, what are they doing? They're now trialing an app-based POS system for merchants. So you can now use a POS in beta with MasterCard just with a bit of software, for example. I know Square are doing that as well, but they have much more of an API architecture. Yeah, they got AvidX exchange stake in that. API payments, AI. So MasterCard really pivoted towards this kind of not zero-sum game, but low revenue game where they're looking for ancillary revenue more than just revenue from their core brand. That's happening. This is interesting. Tandem in the UK did have a funding round from a Chinese entity, which failed. And then Qatar Qatar bought Harrods Bank and gave the license to Tandem. So interesting move there. Things move quickly in fintech. ICOs, you've heard of them. Got a lot of investment in them. 1.8 billion invested in ICOs so far and rising. We'll see what happens here. Different regulators have got different perspectives on this, but people keep putting money in. Obviously, Paris Hilton was involved, so we know as soon as Paris Hilton gets involved, things get a bit more interesting. Just looking at Australia now, this is their regulator, ASIC. I was just talking about somebody senior in the organizations saying things that need to be said because they don't have any kind of meat left in the game. They don't have any risk. This is Greg Metcalf, who's leaving ASIC, saying that we may not have the traditional current account within 10 years. Looking at open banking, digital ID, and the bank as a value store for ID more than anything else. So this is what the Australians are looking towards. Quite a radically different model for banks. Very good for headlines. We'll see if it actually comes into practice. This is NAB in Australia saying the changes are going to be profound. People don't want to talk about it. I know from talking to banks around the world, whenever I have a general meeting, a lot of people ask, what's going to happen to my job? Is AI going to eat my job? Australians being very candid about it here, saying basically people need to have a plan personally. They need to look towards their strengths. They need to retrain because there are going to be massive changes around employment and banking. This is an interesting case. Apple and the Australian banks. So 4 Australian banks tried to sue Apple because they wanted access to the crypto token inside the iPhone for Apple Pay. They lost. Then they started working with a company called PayKey, who enable banking across compliant rails on any social media platform. So quite, as long as you get the rails right, it works. Westpac took up PayKey and started to include this in took a PayKey keyboard so you could pay people very, very easily. Apple soon came in and said you can't do that because you're on our Apple Pay territory. So interesting thing you see here is we have a very promising fintech which is going to simplify everything, simplify processes, save money. When you actually come down to it, there's a compliance issue, there's a legal issue, and it's switched off. So we're talking about a lot of heat in this space, a lot of conversation, a lot of funded startups happening. The interesting thing is when it actually comes to practice, things really can change. I recommend getting into practice with fintech as soon as possible because that's when the market gives you a real test. This is VC funding in fintech, keeps going up. In 2017, halfway through, we're at 49% of funding for 2016. So still very healthy. Global investment, VC, PE, and M&A peaked around end of 2015, but again, Q1, Q2 2017, still on the up. Again, global VC, we see a lot of deals close. The deals close are going down. Angel and seed, again, going down. Early, beginning to peak a bit. And later stage, finally getting some maturity and starting to creep up a bit. So we're finding a lot of fatigue now, again, around fintech investing. People tired of not getting returns and realizing that probably the later stage is where it's at. SoftBank, though, and some big Chinese deals have kind of morphed this a little bit. So SoftBank's been on a real big shopping spree lately. $100 billion tech fund. WeWork received $5.5 billion. Not too bad, not too big. Arm, $24 billion. Improbable, 500 million. Improbable is an AI based out of the UK. They received 84 million from Andreessen Horowitz a few years ago, and they say they can simulate any scenario. It's a game-based piece, and now they've moved into any area. They say they can simulate any scenario whatsoever. That's the value proposition. So SoftBank have invested 500 million in them. So certainly for finance, certainly for fintech, certainly for any kind of financial scenario, really interesting application of AI here. There's another company in London called Simudyne who've written a paper with the BOE because they were able to simulate a rise in interest rates and see what it would do to the housing market. Doesn't sound really complicated, but the BOE could only get up to 40,000 households before their computer crashed. Simudyne with their AI were able to do the whole country very, very easily. So we see this application of AI to finance, certainly for predictive analytics, as being very, very valuable. NVIDIA, the chip maker, very, very busy in self-driving cars, received 4 billion from SoftBank. So, yeah, a few big investments here, some Chinese ones I won't go into big detail on, do distort the picture sometimes. So yeah, we see 1.4 trillion in deposits in fintech, roughly. We see in China, Ant Financial, valued around $70 million now, about 3 Deutsche Banks. Don't forget it's not so old. And we see Chinese banking deposits now 40% greater risk because of the Baidu, Alibaba, and Tencent. So we really, really felt it in China. That's what gets regulators to listen up sometimes. They say, why should we bother with this? We talk about Yuebao Fund, 165 billion under management from nowhere. Suddenly a lot of risk in the system. That gets regulators' attention really quickly. If we look at China's mobile payments market, 5.5 trillion. Doesn't sound like a big number, perhaps, but this is China on the right. This is the US on the left, the little red piece. So massive. Got a lot to learn from China's online payment industry. And also, talking about lot to learn, this is the amount of share that Alipay had and Tencent had. It was 54-37. It's now shifted to, I think Tencent have around, I think about 45% now. We're beginning to see Tencent get more and more market share. These things move really, really quickly. It's difficult to back a horse in this race, if you will. Massive payments market, but a lot of movement in who has the dominant market share. So China, as I was saying, big adoption of fintech, a lot of risk for banks, a lot of banks talking about losing payments, that's gone, wanting to hold on to savings. Bit of a mystery, and then in August it emerged that actually all the big banks have struck up partnerships with the fintechs. That's why it's working so well. I can't see that happening anywhere else globally because of just the way countries are administered, but interesting development there. In Malaysia here, CIMB, Ant Financial started the JV. They want a mobile payments platform. Malaysia is quite peculiar. It doesn't have a high penetration of cards, really, across the population because the merchant acquirer rates are so high. So they're moving straight to Ant Financial mobile payments. CIMB have a stake there. Looking towards Africa, obviously massive opportunities there. I see big opportunities for banks in this region. We didn't talk about it on the panel just now. This is Apps Africa. Profiles all the apps in Africa. Looking at BitPayza, $10 million in funding. EdTech companies, Facebook Express Wi-Fi happening. I know that Tencent are covering Indonesia in Wi-Fi, but Facebook are doing much more in Africa. So again, big changes, bringing unbanked people into the system. all the way across Africa. It is said that fintech innovation is at its best in terms of pure innovation in Africa and in the US. In Africa, because people need to collaborate. In the US, because you have to be competitive. Everywhere else in the world, there isn't much of a need to be competitive or to collaborate. But Africa and America are two good examples of kind of fierce innovation because they've got those kind of opposing climates. This is 1776. They work out of Washington and now beginning to work across Central Africa with micro-entrepreneurs, things like tuk-tuk drivers, vegetable sellers, helping them use technology to optimize their processes and bringing them into financial inclusion. And it does mean a lot of trade for banks. When you look at what DBS did in India with DigiPay, bringing people into the system, it does represent a lot of revenue, effectively. I don't know if you know that WhatsApp, most of WhatsApp's kind of user population uses dumb phones, not smartphones. So yeah, the creators, founders of WhatsApp, keep a dumb phone with them all the time, because if that goes down, they know most of the market's gone down. So there is a lot of revenue to come from unbanked, I would say, kind of micro populations, a big future for banks there. That's iHub working around M-Pesa there in Africa. Going back to the US, EMEA, these are the 10 largest banks involved in fintech. A lot of it's around blockchain technology. So Citi, Goldman, JPM, Morgan Stanley, usual suspects there. In Europe, Santander, UBS, Deutsche Bank, SocGen, HSBC, they're all there in different ways. This is Goldman talking about M&A, talking about getting into fintech. These are the deal values in 2016. Again, a lot happening there in China, a lot of big values happening in the US, a lot happening in UK, and some in the Nordics as well. If I talk about, these are the top 20 deals, obviously big ones in the US. Oscar's a healthcare startup. Stripe payments, now worth $9 billion. Payments in 5 lines of code from Stripe. Pretty genius. I would say it took Stripe quite a while to get funding. Sometimes very good fintechs are so advanced that they're very difficult to conceptualize. So what was Stripe's problem? I think Stripe's first investor was Peter Thiel from PayPal, because he realized that PayPal was getting old. So he started to invest in it, but it was hard to get investment before that. Again, over in China, some big deals. H&A, Lufax, JD.com, WeLab in Hong Kong, and again, big one in Brazil. Just looking at tech in general, we see obviously this big indicator, which is often overlooked, of the top 5 publicly traded companies by market cap in 2006 were all to do with, what we'd expect, orthodox companies. 2016, Apple, Alphabet, Google, Microsoft, Amazon, and Facebook are at the top there. So we see technology driving everything, really. It may not hit the balance sheet yet, it may not be too relevant, but when we look at the markets, tech is at the top. So this is a 3 megabyte hard drive in 1956, being airlifted off an IBM 3 megabyte hard drive. This is 2016. I know we all know how to point at the floor and point at the door, particularly when it's around lunchtime. But this is a problem that robotics couldn't solve until 2012. So all the robotic scientists in the world couldn't solve this simultaneous location and movement problem. Until in 2012, some kids waved around an Xbox, and suddenly they solved the SLAM problem. So there's been such a massive surge in technological innovation, particularly around mobile. A lot of the tech centers have shifted to China as mobile components become more important. We have this big surge a big change, and that has driven a lot of fintech, really, a lot of digital banking innovation. But I think a lot of us in banks, particularly, my background is in banking before I was in fintech. I understand it very well. I wish some fintechs understood it more too. We're still predicated around this 3 megabyte hard drive model. And really, we're operating in an environment where we have this kind of very rapid innovation, mobile innovation model. So I'll just finish with the banking stack. This is how it looks now for anyone who's involved in digital banking. At the top, we have the hardware layer, so the handset, Xiaomi, iOS, Android. Underneath that, we have the operating system. Underneath that, we have the app layer, which is where you get a look-in as a fintech or a bank. Underneath that, obviously, the cloud and tender layer. Underneath that, the credit line. And underneath that, the bank account. So the bank account sits at the bottom. It's quite strange for me because the bank account funds everything. It makes everything happen. It's a regulated piece. But it sits at the bottom of the stack. And the hardware sits at the top. There's a lot of mitigation now between you and the consumer. We're talking just now about the youth market being really important here, driving a lot of change. And they're the people who are on top of the hardware and the operating system. So no surprise that we see the likes of Tencent, WeChat, Alibaba, Alipay, Apple, Amazon. There's a term for it, what is it called? Fat bag they use at the moment. Facebook, Alibaba, Tencent, Baidu, Apple and Google coming into the banking market. No surprise that we see Wefts saying that they could start to get some more respect from the regulator and start to be operating much more efficiently inside the banking environment because they are controlling the relationship between the consumer and the bank. At the moment, we still have a lot of offline transactions. People obviously trust is the biggest asset for banks, I think. They haven't really moved en masse. Mass affluent haven't moved to fintech yet. But this is the state of play for anyone involved in digital banking and fintech. So I just round up by saying that RegTech is the biggest growth area, really. When we look at PSD2, everything else, we see regulatory technology, if we can get through all the examples, as the biggest growth area in fintech. And it's because, really, the regulator's trying to keep up with innovation and wants to create a stable market. The banks want to keep up with it. So a lot of investment in regulatory technology. So we see here in Japan, for example, 47 banks using Ripple, a blockchain solution, effectively, for payments. We see Clearbank in the UK, who can get an Aussie dollar payment in a Starbucks over through to London in a millisecond. So we see a lot of movement here around these rapid innovations, but they need to be tested and regulated, and that's why we see a lot in regulatory technology. Encouraging to hear here in Saudi and Kuwait that banks and fintechs are working very closely together because that enables the regulators to stay in the loop. So I kind of bombarded you with things from around the world, but I hope you found it useful. Just as a little taster, really. I could be here for a whole afternoon detailing it, but you've got to move on and think about present-day business as well. Does anybody have any questions about these innovations and what they mean for this market? Any question is a good question. Any Bitcoin questions? Bitcoin normally gets people going.
Thank you. Can you talk a little bit about some of the pitfalls that you've seen around the world with countries adopting fintech? Some things that we should be aware of when adopting it here in the region.
Things to be aware of in this region. Sorry, I had a bit of a problem with the. Excuse me. I've got a relay here. Sorry.
So I was asking about what are the problems and pitfalls that have been experienced around the world, especially in the leading companies like Australia and India and China, that regulators and markets in other places in the world could benefit from learning from those problems and avoiding them early?
I would say people moving ahead of regulation far too quickly. So if we look quickly at crypto, for an extreme example, we have Bitfinex, Bitcoin exchange, that lost $50 million, the equivalent of $50 million, because they gave their private keys. Obviously, you need private keys for crypto. They sourced them to a third party, and the third party was corrupted, or corrupted itself, who knows, but $50 million went missing. So that's one thing. Again, with the DAO, which used Ethereum as a currency, what happened to that? Again, it had $40 million, which was in jeopardy because there was a flaw in the code, there was a flaw in human process. There's no regulation whatsoever around this. People crowdfunded in the DAO, and then a coder discovered there was a flaw in the code which hadn't been peer reviewed properly, and they took $40 million, and they had it for a month. After a month, it could be released, or not. And the way not to release it was to reverse the blockchain for Ethereum. So it ended up making two different types of Ethereum, Ethereum Classic and Ethereum. So that's a mess. I would say those two things are. Other things that have failed, generally just things like PayKey here in Australia. It's a great idea. People give it awards, but it hasn't been tested. Generally, and a lot of wasted investment in companies which had just died or gone into a bank, done a POC, I won't name names, but it hasn't really gone anywhere, and people spent a lot of time and energy on it. So I think we'll see with PSD2 a lot more failures which you can learn from, and a lot more successes. But I would say my general observation globally is that people haven't reverse engineered enough. They've seen a really good idea, and they've got excited about it, a bit like the financial crisis, really, and derivatives, but they haven't thought, if this goes wrong, what would happen? Why did it go wrong? They haven't brought the whole bank and the whole team into it. That is a problem I see time and time again, is a bit of excitement and speculation without qualified judgment. That was a long answer, so I might have scared you off. Any more questions? Anybody curious about movement around maybe AI in banking here? It's probably lunchtime, is it? Yeah, it's a much better thing. Okay, well, thanks for listening. I'd be happy to talk to everybody in the break, and I hope you enjoy your lunch.